Hello, everyone. Good to connect with you again. Missing all of the fun times we were having in Bali, and it's really great to meet so many of you in person. And looking forward to doing that again as soon as possible. We've got some really interesting stuff going on simply because the markets made a big move right at the end of the U.S. markets made a big move right at the end of the day, or the end of the week, I should say, rather early on in the day, but they kind of held that trend. And I want to show you what drove it and where it's likely to go. So you see here on Forex Factory, the core PPI and the PPI month over month. That's the producer price index. It's a sort of wholesale version of price increases, and people use it to measure whether or not inflation is continuing or receding. The expectation was they were going to come in at 0.2%, and they came in at 0.3%. The core PPI came in at 0.4%. So both of those signal, hey, inflation hasn't really gone away yet. Now, the Fed has been saying, yeah, we think we might be getting close to the top of our interest rate stuff. We might be able to slow a little bit and maybe not raise so much through 2023. That's kind of, I think, what they were hoping they could get away with, and what they thought they would do. And on these numbers and some earlier numbers that came out during the week, the U.S. markets are basically saying, we don't believe you. We think you, Fed, are going to have to raise rates more. And we don't know how much, but at least a little. And therefore, this is what they did. So these are the futures for S&P 500 in the upper left corner, NASDAQ right below, the U.S. dollar index, and the bond futures. As you can see, the news came out right there at 21:30 Singapore time, and big old drop, recovered really fast, but ended up going right down to that low. This is the S&P 500. It dropped hard, came all the way back up, but then came all the way down to essentially the lowest place of where the initial reaction was. Whenever I see a news reaction go like this, it just really moves fast, and then it recovers some or most or maybe even all the way, but then comes all the way back down to the point of most intense panic in the first overreaction. That is I find, very, very strong indication that move is going to continue on further. So given that we have the whole weekend, it's hard to say whether or not people will, sort of shake off the cobwebs and do something different. I believe what's more likely is that the U.S. stock market will continue lower. I got one more chart that will also help confirm that that's possible. I don't know how much lower it will go past that. There's always I wrote a couple articles years ago on the Santa Claus rally. And there's always a moment between December 15th and December 30th where the market tends to bottom. And that bottom is such a fantastic buying opportunity. Even in the years where it goes down, it's still, you can get in and get out with a short swing trade. But if it's going to be a good year, a recovery year of any kind, then that tends to be a really good move. And so this is setting us up for the bottom of the Santa Claus rally. And that's what you're going to want to watch for next week. And if you're watching stock indexes, U.S. stock indexes, that's what you want to watch for. Where does it seem to bottom out next week? And, maybe towards the end of the week, maybe even the beginning of the week after, but somewhere in there before the weekend, after it comes out of the Christmas weekend, since Christmas is on a Sunday, the days after Christmas are likely to be bullish all the way to the end of the year and into the first couple of days at least of January. Now, if it turns out that January is not, it's not always this way, but it's about that way. It's that way about 70% of the time. And if it turns out that January, the first 2 days are, big down days, okay, that's probably going to set up for a bad year, a bad entire year for 2023. But that's not what I'm expecting. I'm expecting that we're going to see some sort of a dip between now and the end of the year. And from that dip, we're going to rally pretty good into the middle of middle of January. That would be my expectation because that's the way it happens. Some variation of that tends to happen more years than not. Okay. Now then, notice what happened here also. The bonds went down. Well, this is because people are expecting interest rates. Interest rates are going to have to go higher. There is no way that markets, bond prices can go higher and stock prices can go higher if investors believe that interest rates are going higher. They just, it's headwinds. They can't push that far forward. But if interest rates go higher, there's one thing that's going to go higher with it, and that is the US dollar. So any US dollar denominated currency pairs are likely to do well, such as the dollar yen down here in this corner. This is an hourly chart, and you can see the reactions got going right there at that same time as that news came out. And, dollar yen ended on a, close to the high, but not quite the high. What's really got me surprised, though, is that the Australian dollar and the US dollar also trended higher. See, I would have thought that the US dollar, if anticipation of more interest rates, then, it would be outstripping the Aussie. But the Aussie, rallied even more than the US dollar. So what that says to me is that investors are saying, yeah, RBA, you're going to have to raise rates. That's all the U.S. is going to sneeze, you're going to catch COVID or whatever. I don't know what the right analogy is going to be there, but clearly investors are expecting Australian dollar to strengthen. And that's an interesting trend because it's creating a couple other things. Look at this Australian Canadian Aussie loonie. I mean, wow, what a trend. Buy that dip, right? And the Euro Aussie just coming down the other side. I mean, Euro's going to go basically where the U.S. stock market goes. And so those are some really interesting trends, I think, that are worth watching. The pound over the dollar, see, that surprised me a little bit, but notice it doesn't really look like the Aussie. The pound goes up, but comes all the way back down and then closes just slightly lower than where it was before the news came. So I wouldn't trust this upward trend on the pound to continue. That's just my read. I mean, I imagine some other guys are going to be saying different things about it, but I wanted to give you that take. And next week is the Fed. The Fed is going to have its interest rate decision. Everybody's expecting a 3/4 point rise, probably the last one. Many people were hoping that it was only going to be a 0.5 point. But now, after that news, I think the way the markets are reacting is like, oh, sure enough, it's going to have to be another 3/4 point after that. And then everybody's going to really listen close to see whether or not the Fed is going to, make noise about tanking, make noise that would tank the markets because they're going to have to keep hiking rates more than they were expecting to, right? So that's the stuff that's going down in the U.S. markets next week, and that's going to line up perfectly with this idea of a mid-December dip right in front of a Santa Claus rally. Now you can say, Gordon, wait a second. If they give out their bad news and they dip, then it's just going to go down the rest of the year. Yeah. I know. That's what you would expect. Statistically, it doesn't go that way most of the time. In fact, it's almost even more likely, better than 70% likely in a year where the index is down for the year coming into December, that it rallies at the very end of the year. That's a phenomenon. Now, the fact that interest rates might be raising still, that could throw everything off, turn it all upside down. So what you're going to watch for is after Wednesday. Whatever dip is going to occur in the market, it's likely to occur after Wednesday. It might be on Wednesday when they release the news and it just drops down. If you see the market is just coming roaring back up and heading higher, well, okay, there it was. That was the dip. The post-Fed news was the dip, right? I don't think it's going to come that fast. I expect, day or two will sort of wash it out. But whatever low is right there is probably going to be a pretty good buying opportunity for stocks and the corresponding currencies that are trending that way. Hope that's useful to you. Take care, everyone.